always seem to do that with the screen. Welcome back, guys. Pleb Underground. I am your host, Coin Icarus, and we are going to take a look. Hopefully hopefully my studio doesn't completely screw up and blank out like it did yesterday. I do apologize to you guys. Yeah, the fun stuff with tech today. Talking about tech. That's right. There's another publicly traded company, as if that shitty coffee company last week there, Vanati, making a pledge to buy Bitcoin. Well, wasn't hopium enough, right? Wasn't making us all excited enough. Guess what, guys? We have another player today. That's right. We're going to take a look at Mercurity FinTech, because apparently they love Bitcoin. They're going to be building on Bitcoin. All right. And yeah, we're going to take a look at this. We're going to take a look at this company. But before we do, you know the drill. Let's give some love to the Pleb Underground sponsors. And we will be right back to dive into this amazing opportunity. I'm just kidding. It's what a train wreck. Let's do it. I'll be right back.
Head on over to Archimedes Emporium. They make absolutely beautiful Bitcoin branded products. They just dropped their first one. It is the solid aluminum Bitcoin clock. I had to get my hands on it so that I could show it to you guys. Take a look. Really, really nice piece. Beautiful craftsmanship. Head on over to archemp.co. The link is going to be in the show notes. That is Archimedes Emporium. Head on over there.
All right. Welcome back. Let's take a look. Let's start diving into it. So, Cointelegraph put out this article today. NASDAQ listed Mercurity. It's a very easy word to say. It just kind of flows. Mercurity FinTech to raise $800 million for Bitcoin Treasury. So, I just want to explain here. They don't have $800 million, right? They don't, and as you'll see from their numbers, it's a negative cash flow company. I know, Phil, it doesn't matter that they don't make any money because they're buying Bitcoin. No, that's not true. And unfortunately, we're going to all learn this the really hard way. But yeah, so they are going to raise $800 million for a Bitcoin treasury. Okay. Sounds great, right? Sounds super, super bullish, right? Sorry, I'm trying to find a better screen. There we go. I think that's a little bit better. All right. So Mercurity FinTech Holding, a NASDAQ-listed digital fintech group building blockchain-based payment infrastructure. Just pay attention to the word salad. Plans to raise $800 million to establish a Bitcoin treasury reserve as more companies adopt the cryptocurrency for strategic purposes. So in other words, they have no idea why they're buying Bitcoin or why they're pretending to buy Bitcoin, but they understand that other companies have said they're going to buy Bitcoin. So here they are. They're going to buy Bitcoin. All right. Yeah, let's continue on. So, as we know, they plan to raise the $800 million to establish a long-term Bitcoin treasury reserve, as opposed to the short-term reserves everybody else is making. It's just weird. Anyways, which will be integrated in its digital reserve framework. Yeah, I like that. Through blockchain native custody. Blockchain native custody, what I just said, it actually doesn't mean anything. They're going to do staking integration. So you can imagine, right? There's going to be no rehypothecation there. They're totally just going to hang on to their Bitcoin and do nothing else with it. This is totally not going to go the path of Luna. I'm sure this is going to be great. Anyway, so what else? Staking integrations, tokenized treasury management services. For anybody watching this show, if you could just give me, because I honestly have no idea what a tokenized treasury management service is. If what they're talking about is just holding the keys to your hardware wallet, right? Having your own private keys, then I guess that's a management service of sorts. Could be. Who knows? All right, let's continue on here. So Mercurity said it will transition a portion of its treasury. Oh, here we go. Portion of the treasury to yield. Oh, I love that. I love it when there's yield, guys. Yield makes me so happy. Feels so good when they say it. Yield generating blockchain aligned reserve structure that reinforces long duration asset exposure and balance sheet resilience. So you guys know, I worked for a public company for about 20 years, a Fortune 500 public company. And this This is some freaking word salad. This is just absolute bullshit. Okay. It sounds good. I feel good reading it, right? Oh my gosh, this company's going to do such great things. They're going to make so much money because they're holding Bitcoin in their treasury, right? Like, so this is just some feel good stuff. And we're doing that right now. We're feeling good. All right. So let's see here. Altcoins are also benefiting from the growing, what is it? From the growing institutional interest there. That is, again, guys, they're really excited that everyone else is buying Bitcoin. So naturally, they're going to buy Bitcoin, or they're going to pledge to buy Bitcoin. Anyways, let's see here. Oh, Interactive Strength, a NASDAQ-listed fitness equipment manufacturer, announced plans to raise up to $500 million to establish, that's right, guys, that's a shitcoin token treasury, right? This Fetch AI thing, which is kind of funny because I actually did a clip about Fetch AI 2 years ago, explaining that it was a shitcoin going nowhere. And yeah, let's just quickly take a look. So take a look at this is Interactive Strength, guys. This is Interactive Strength. And what they did over here, guys, these are two reverse splits. Okay, this is what companies do when they've often issued too many shares, and they kind of need to make the financial picture look a little bit better. What also happens is that when their shares get below a certain price, they get exchange listing warnings, right? Like that they're going to get delisted. So one of the easy tricks that a company can do is do a reverse split on their shares, right? And that will prop up the share price temporarily. I mean, it still goes to zero, but in the meantime, it looks good. So now let's actually go take a look at this Mercurity. Hey, what's up, Bitcoin router? Oh, sorry, guys. I forgot to put your comments up here. Okay, let's go take a look at this Mercurity financial, right? Just a quick overview. So back to Mercurity. Earnings have declined by 23% over the past 5 years. I want this company holding Bitcoin, and I know they're going to be able to do it for the long term, right? And let's see what else. All right, the share price volatility, I don't really care about it. Who cares about that? And doesn't have meaningful revenue. So less than $1 million. And this is my favorite part. I got to tell you, MetaStranded or MetaPlanet, whatever they're called. This is, I got to tell you, Mercuritech or Mercurity FinTech is giving you guys a run for your money when it comes to the profits per employee. Even Strike doesn't have these kind of numbers. Look at these guys. They got 13 employees. That's huge. It's huge. And I know, of course, like I'm just, like I'm not saying, oh, well, if a company has 13 employees, there's no way that they're going to make any money. No, that's not what I'm saying. What I'm pointing out to is that that's one of the selling points that some of these ridiculous Bitcoin holding companies do. It's like, well, wait, you know how many employees we have? We have so few employees. We're making so much money per employee. The fuck is that a metric? What is that? Anyways, the funniest part of this, though, is that back in 2015, they had almost 3,500 employees. So obviously, this is a company on the trajectory to success. Okay, and making sure that they pledge to eventually buy Bitcoin with the revenues they don't have by raising funds, by diluting shareholders. That's just the recipe that they're using for this success. Okay, guys, that's all this is. You just gotta follow the plan. Okay, that's all we're doing. We're just following along on the plan. Okay, so last piece to the looking at this, because obviously I had to go check out their website, right? Had to go and check out the website. But before I do, let's go and remove that. Let's remove this. Sorry, guys. Okay, so here we go. The Mercurity FinTech website. Okay, this part of it actually for me was really interesting. So keep in mind, right? Like these guys, they're building, right? They're building this huge fintech thing. They're going to do real world assets, right? Which means shit coins, right? They're going to tokenize things in the real world and make them fake things on the blockchain so they could extract money from unsuspecting noobs. This is, I mean, it's just great work, right? Just doing the good work. Anyways, go take a look at their business segments. So they've got 3 business segments, guys. I want you to pay attention to this. It's a blockchain and digital asset solutions. They've got AI and HPC infrastructure, right? Because that's what's happening these days. And they're offering financial services. All right. So we're doing buzzword bingo. We've got these 3 separate segments. Let's dive into the nuance of each of these segments. We'll start with the blockchain digital asset solutions. Yeah, there it is, guys. That's the blockchain digital asset solutions. Not much going on there. It's a growing company, though. It's a growing company. All right, next one. We're taking a look at their AI data center Oh, huh. I'm sure there's something that's going to come along. I'm sure of it. Yeah, they're building that out, guys. Stay tuned. Stay tuned. Well, maybe we'll check out their financial services. This is big time, guys. This is absolutely. Anyways. All right, guys. So there you have it. There you have it. That is the latest and greatest publicly traded company that is going to be buying Bitcoin for their treasury. Now, I've been covering a lot of these, and you'll notice a pattern between these companies. Actually, you know what? Interesting. I don't think I pulled up the Mercury chart. There's the Mercury FinTech Holdings chart. It's kind of interesting, though, the split that they did over here. Okay, this was a 9-for-10 split. I got to be honest with you. I've never seen such a weird split structure. It doesn't mean anything, right? It doesn't mean that because they did this weird thing, but it is kind of strange. Like, why would you do 9 for 10? It's just kind of weird. It's like they just wanted to lower it enough. Excuse me. But you can see here, guys, the overall trend. I mean, this is just a straight up dump. You take a look at these guys, right? The interactive strength Inc. Same thing. I mean, look at these guys. 2 reverse splits. I mean, technically their shares were worth $34,000. Like, do you have any idea how much value these companies have destroyed? Okay, so obviously, right? I've said this before. Not every single public company that is going to pledge to buy Bitcoin is going to be a complete freaking train wreck. Okay, Mercado Libre, right, who is kind of like the an equivalent to eBay, but in LATAM, right, Latin America. Those guys are cash flow positive. Okay, and they chose recently to buy Bitcoin for their balance sheet. Now, I'm not being a cheerleader for these companies. Like, yeah, Mercado Libre, they're the best company in the world because they're buying Bitcoin. They can do no wrong. No, I don't give a shit. But the point is that a company like that can afford to hold on to their Bitcoin for years into the future because they don't need to sell it in order to pay to keep the lights on, like we are seeing with most of these companies that are coming to the plate. So first we've got the Bitcoin holding companies, which off the bat, they have either they've done a merge, right, a SPAC, right? Either they've merged with a public company, you know, that essentially has dwindling or dying earnings, okay, or they've merged with a company that just has absolutely no earnings whatsoever, and now it's just going to be a Bitcoin holding company because the original business had absolutely no business. Interestingly enough, the CEP, right, Cantor Equity Partners. I mean, if you go take a look at their share structures, if you go take a look, they've got a few tickers. All of those tickers actually don't do any business. They are literally placeholders for businesses in the future. I'm going to start up this public entity so that someone can come and merge into me, and then we can dump our bags onto the market. That's unfortunately what is happening right now. And again, like I said, not every single one of these is going to be a piece of crap. And I am not here to tell you which ones are going to be amazing and which ones you should buy and all that stuff. No, I personally don't want to touch any of these companies. What I would rather do is actually hold Bitcoin. What I do see, unfortunately, is quite possibly we may see a situation where the Bitcoin holding companies will maybe outpace drastically the growth of Bitcoin, right? In terms of the actual, I guess you'd say the percentage. right? Because it takes a lot more volume to go from 1 million to 2 million than it does from $1 to $2. Okay, so that to me is going to be one of the things that we may end up seeing, and it may end up tricking a few Bitcoiners out of their Bitcoin and into buying shares of companies that hold Bitcoin. These companies, you don't have any claim to their Bitcoin. Okay, when you're a shareholder, you're the last person on the list. Okay, when these companies go belly up, okay, it's the bondholders. There's a whole list of extremely wealthy people, okay, that bought in way earlier than you and bought different shares than you did. I should say different financial products that you did that have, let's say, more skin in the game, and they will end up getting paid first. So if you actually want to have the benefits of Bitcoin, right? All of its qualities, the censorship resistance, the hard cap, the fact that everybody can verify the transactions, all that good stuff, then you actually want to buy and hold Bitcoin. You don't want to buy and hold these worthless shares of companies that all of a sudden they can do, like I showed you guys from that interactive, whatever the hell they were called there, interactive strength, right? These guys did 2 reverse splits. Okay, so if you understand what happens here, right? This is what happens in a reverse split. Okay, let's say you have 10 shares and they do a reverse split. They do a 1-4-10. Okay, so that means that your 10 shares now become 1 share. Now, of course, you're going to be like, but Phil, now that share is worth so much more and it can continue to go higher. I got to tell you, I'm sure there's public companies out there that have done that, but I have yet to see one in my 25 years of experience where they do a reverse share split and all of a sudden the shareholders end up winning. Normally, what I have seen and what I have experienced is very simple. They reverse their shares. They reverse the split. The share price goes up. And within 3 months, the share price ends up right back to where it was. And now you've lost even more money. Yeah, this is definitely the cycle where the VCs have figured out that it's a lot easier to peddle shares than it is to peddle altcoins. And in tokenization, everybody saw that it was a scam, but when you have these companies involved, it's more sophisticated, right? Because now you can point to earnings and earnings potential. Whereas in tokenization, you had absolutely, there was no claim to any of the quote unquote earnings of the token issuer. And again, right, if you look back through history, so what did they do when the VCs figured out that wasn't working, people holding the tokens going to zero wasn't enough? What was the next thing they introduced? They introduced DeFi and they introduced yield to give you the idea, right? It's the carrot on the end of the stick. You need to have a reason to hold this crap. Anyways, guys, that's all I wanted to talk about today. I'll be pleasantly surprised if Mercurity FinTech, what a terrible name. I'm sorry, that name just does not roll off the tongue. Mercurity FinTech, I'll be pleasantly surprised if they don't go belly up and just totally end up, not doing anything with Bitcoin. Exactly, Bitcoin router. Exactly, Dino. Decentralized in name only. But like I said, I'll be pleasantly surprised if these companies don't fall apart. But again, like I've said before, and I will say it again, if we're going to see companies buying Bitcoin, then I think that we should be a little bit more receptive to higher quality companies that are purchasing Bitcoin and not these garbage companies that are using it as a parlor trick. Okay? Because Bitcoin is not a parlor trick, but these companies are treating it like one. Anyways, guys, have a good one. Tomorrow's going to be should be a great episode. We've got Sir Ulrich is going to be joining me, and we are going to have Bob Burnett we were supposed to have him 2 weeks ago, but scheduling got all screwed up. We're going to have him on the show tomorrow. He's the CEO of Barefoot Mining, and Bitcoin miner. And if you guys have any questions you want to ask him, join the show, ask the questions. He's going to be on here live. It's going to be at Tomorrow we're going to do it at a different time. It's going to be 2:15 p.m. Eastern. So yeah, a little bit different, but I totally think it's worth it. He's got some great takes about Bitcoin mining, and more specifically mining centralization. I definitely want to talk about that. And yeah, guys, that's pretty much it. So have a great rest of the day, and I will catch you all tomorrow. Peace.